In today's video, I'll be going over a penny stock that can literally have a 100% gain very quickly and in the short term. So this company is very undervalued fundamentally. They have solid financials. They are completely bottomed out, I believe. They've been consolidating for the last few weeks. And pretty much every time they've reached this level, they have had 100% gain. So this is definitely one you have to watch. This one has a tiny micro float, so it can move very easily as volume starts to pick up. And at the end of this video, guys, I'll be showing you a company that is trading at $1 that I believe is the most undervalued company, or at least one of them in the entire market. I think, and no one really knows about this place. It has a $48 million market cap. They did well over $200 million in revenue for the first quarter of this year. They just did $160 million in revenue for the second quarter of 2023, which was down around 50 million plus from the first quarter, but their margins went up significantly, making it their first profitable quarter in company history. So revenue did go down, but this is due to, restructuring going on and a lot of business changes to actually work on their margins and improve their business. So this is one with a lot of potential. Make sure you stay until the end so you do not miss this play. First stock I want to talk about is ticker MGIH, trading at $1.75. Now this one has been consolidating for the last few weeks. Did actually hit a high of around $2.93 in the past month. It is trading near the 52-week low of $1.54, and the 52-week high is just under $5. So this one can easily hit $2 to $3 with some news very easily. It's been consolidating, like I said, just one to watch. And based on their fundamentals, they are extremely undervalued. So looking at their market cap, it's $18.2 million. 10 million outstanding shares with a small float. I believe the float is under 2 million. Could be wrong, but I didn't really go into it that much. With that small float, it's getting around 1 million plus volume each day. Today, the volume is kind of low, but like I said, with some news, this one could easily get to the $2.50 range, up to $4, maybe even $3 plus. Every time it gets to these levels, it pretty much has a run to, $2 plus. So definitely has been consolidating and one to watch. And based on their fundamentals, this one is a really solid company in terms of their financials, everything like that. If this one does break the $1.90, just over $1.90, just under $2, if it breaks that, I think it could push to $2.50 all the way up to $3 plus with some news as well. Just definitely want to put on your watch list right now with a micro float, one that can move pretty easily with the right volume once volume starts picking up again, and definitely one that could be bottomed out right now and you could swing as of right now. But according to OTC Markets, they did around $66 million in revenue for 2022 with $4 million in net income. Now we have support just around $1.66, just under $1.70. So don't really see it going past that, but as you can see, the last few weeks it has been consolidating. And looking back on the chart for the last few months, this one, every time it reaches these levels, it always spikes up. So that's the same pattern we're looking at. You can see back in May, hit these levels, spiked all the way to $3.68, reached these same levels, spiked all the way up to $3.42, reached these levels again, spiked up to $2.50, consolidated for a minute here, and then spiked up all the way to $3.70 just recently, just a few weeks ago. So guys, it's consolidating again, has support at $1.66. Definitely one to watch right now, as it has shown these spikes for the past few months. Definitely one I'm looking at. Just really needs a catalyst or some news to come out so volume can start picking up again. Like I said, it does have a micro float, so it doesn't really need much volume to move, but you can see volumes really died out. If it does break this level right here, if it breaks just under $2 right here, I do think it can spike to $2.50 plus all the way to $3 plus with the right catalyst of get some news and volume starts coming in. This one's just definitely one to watch because it's undervalued fundamentally, and just as shown that once it reaches these levels, it does spike up. We have to talk about ticker SDOT grouping. You guys are probably tired of me covering this company over and over, but I just believe this is probably one of the most undervalued companies in the entire market. Trading at $1.03, has support around 98 cents. Don't really see it ever going that low. But, in my opinion, this one should be trading at $4+ or multiple dollars. They do have 46 million outstanding shares, very good share structure, a market cap of $48 million. Let me show you why this is so crazy. So a $48 million market cap, and they just did $213 million in revenue for the first quarter of 2023. Keep in mind, you always add 3 zeros. They did $160.3 million in revenue for the second quarter of 2023. Making it their first profitable quarter, doing around $200,000 in net income. So definitely a big marginal increase right here. As you can see, they did more revenue in the first quarter, $213 million, but they lost $1 million in net income. And then they, revenue went down around, 50 million plus dollars, and they did 190,000 in net income. So they were profitable in terms of net income. They're doing crazy amounts of revenue, just fixing their margins, and I do expect revenue to go up from $160 million. That's just my opinion, because they're really doing a rebranding, really restructuring their business right now. They have a lot of restaurants they're trying to clear up and fix the margins on those, the ones that aren't really performing that well. This is just one that is extremely undervalued, one that I actually have shares in myself. I'm watching it right now. Don't really think this one will ever go under 98 cents in the short to medium term. I just think it's bottomed out. I could be wrong. I'm not a financial advisor or anything like that, but this is one that I'm watching very closely. I actually own shares of myself. They just reported top line revenue of over $53 million in just 1 month for July of 2023. They do have around $5 million cash on hand. And looking at their debt or liabilities to asset ratio, it's not the best, but definitely not the worst. It's really not that bad. So they have $50 million in total liabilities compared to $72 million in total assets. So really not that bad. Could be a lot worse, and actually is pretty decent. You can see right now the average volume is 400,000. Volume today, it's not even 1 o'clock yet. Volume is 136,000, so volume is really died out. We need some momentum. Like I said, there's support at 98 cents, and this one has just been consolidating. And I think with some news, once they get some momentum, this one can easily get to $1.50 to $2 plus in the medium to short term. That's what I think. And, even has a lot of potential over the long term, in my opinion, because they're only just getting started, have a lot of stuff going on. Some news or catalysts that come out because it's consolidating, and the stock price can really go up. And it may even take until the next earning reports come out, which I do believe will be positive and, increase the trend in the stock price and will cause an uptrend in the stock price. I do believe that will happen if we don't even get any news until then. So stock price might go down a little if they are silent. But like I said, any news and spike in volume will really push this one up. Really needs more eyes on it, and it may take until the earnings come out to do this. We'll just have to wait and see what happens. So just guys, there has been a lot of insider buying going on in the month of August. I can see all these Form 4s here are insiders acquiring and buying shares. So as you can see on their transactions with SEC, these Form 4s, their last 4 or 5 purchases, you can see these people are buying up shares. They also had, it shows right here that Agia purchased 8.8 million shares for a price of $3.12, but they actually, they didn't actually do this. They actually have a lot of terms that go into place with these shares. They actually acquired around 5.6 million shares in Q1 or throughout Q1, leaving them around 8.8 million shares available, because they had around 14.6 million shares available for their agreement they had. Looks like the end of the 14.6 million or whatever the maximum available shares was for the agreement, which was just over 14 million shares. This looks like the rest of the shares right here, which should be available for compensation as they do reach new milestones. So that's what happened here. There's a lot of terms that go into play with the actual price. So that's actually not accurate, it looks like. Previous addendum where Agia can earn up to 14.4 million shares of SDOT's common stock. But now they have a new addendum. Under the new addendum, Agia may continue to earn shares using the net income generated in SDOT. However, instead of allocating 80% of SDOT's net income for stock issuance, we have modified this allocation to 40%. This change will reduce the quarterly non-cash stock-based expense by 50% with the intended result of improving the bottom line results for the company. The CEO, Michael Roper, said this addendum reflects Agia's continued support and confidence in their performance going forward. So obviously they believe, Agia believes they can really drive the net income for the company up, as they will be awarded stock compensation for doing this. Which, not everybody likes, but, if they can really get the net income up and the revenue up, then it should be worth it. They believe this addendum will significantly clarify our financial reporting and improve our quarterly reported net income. While the fundamental terms of the agreement have not changed, Agia has nominated 8 new board members. They still have the opportunity to earn up to 14.4 million shares of stock, etc. The new addendum, however, is expected to cut our quarterly base expense in half and is more than triple the amount of net income for SDOT that will accrue to SDOT's bottom line revenue. Keep in mind they had a ticker name change, so they're not Muscle Maker Inc. anymore. They're ticker SDOT. This is a significant improvement in our reporting processes and efforts to enhance shareholder value. So basically, Aggia is really confident that they can help SDOT really drive their net income up and everything like that. Right now, the outstanding share count is at 46 million. This might go up some, but it shouldn't be a crazy amount. But that's something to look at. But, you know, when their earnings come out, you know, this one is still completely or very undervalued. You know, this is one to really watch, especially when Q3 earnings come out. We'll see how, you know, how they have performed, how they really improved. That's something I really want to look at, and I will do more updates on them. There's just a lot going on with this stock. If I really wanted to, you know, talk about everything they're doing, the video would be way too long, so I'm not going to do that. And I'm running out of time here. So guys, make sure you like the video, put notifications on. Let me know what you think about this company. Let me know what you think about other tickers you're watching right now, and I will see you on the next video.